Good morning. I'm Duane Zavadil with Bill Barrett Corporation. Bill Barrett Corporation is a Uintah Basin producer from Tavaputs area, BlackTail Ridge, Lake Canyon, and now some production out on the eastern end of the basin as well. This morning I'd like to kind of divide my discussion into three broad parts. First, a discussion of the overall development potential in the basin. It keeps us all quite excited. Focus or talk just for a few minutes about Bill Barrett Corporation's activity, then talk for a moment about some of the challenges and how oil and gas producers view the array of risks that we face and make investment decisions. I'll start with the takeaway: tremendous investment or tremendous development potential in the basin. We like to call it a hydrocarbon warehouse out here, and as we go through the discussion, I think you'll begin to understand why we're so excited about the overall potential, the geologic potential at a minimum, for the basin. I think I got the prompter here. First, a little bit of explanation about, we'll talk about geologic basins and topographic basins, but a faint yellow, I don't know how visible that is on your look, but faint yellow shows the outlines of what we call the geologic basin in this particular case. Basin. There's a basin on the surface and a basin in the subsurface, a deep accumulation of sedimentary rocks that contain hydrocarbons. Tribal airshed shown on this map as well. And what's more important, or very important here, is the array of very capable operators with a lot of resources, a lot of capital ready to deploy in the basin given the opportunity to do so. Anadarko's, Ute Energy, Newfield, EOG, on down the list, Questar, and again, real companies, a lot of experience in the basin, have been operating here for some time, and capable organizations. That's part of the potential for the explosion of production that's possible in this case. I'm going to apologize up front that these arrows probably don't point precisely to where the individual company's operations are, but I had to generalize a bit as we went forward. And then also note that the red areas and the green areas are expanding dramatically and quickly in the basin. That's probably a 10-year-old snapshot of what they consider to be the oil and gas producing areas in the Uintah Basin, but as we move forward, you'll see how dramatically those limits are expanding. A little bit of discussion on the basin structure and begin to illustrate the hydrocarbon warehouse aspect of the Uintah Basin. It's an asymmetrical basin, shallower to the south, gets continually deeper to the north. What's not shown on here is the fault that brings the Uintah Mountains up on the north side of this structure. So kind of a steeply, or a dipping, northerly dipping basin in this case. But some of the formations you've heard about, the Green River and the Uintah, the yellow wax and the black wax, but we're talking about thousands of feet of accumulation of hydrocarbons. Stack on top of the oil and gas resources, the coal and the oil shale in the basin, again, you begin to see this concept of a hydrocarbon warehouse. I can't think of another place, at least in the West, where we have this thick accumulation, multiple potential productive horizons with multiple forms of hydrocarbons like we have in this case. Certainly not to the extent that we have in the Uintah Basin. This illustrates some of the productive horizons, and again illustrates again this thousands of feet, multiple potential plays. There's a log over on the left-hand side of what you're seeing there. That probably doesn't mean a lot to the non-geologist in the room, but the right-hand side illustrates where the various fields are productive. Bluebell is productive from both Wasatch, Green River, Altamont, primarily I believe a Wasatch production area, but on down the line and over to Greater Natural Buttes, which produces from slightly deeper horizons. What I don't show here is some of the other formations that we believe contain or have hydrocarbon potential as well. The Dakota, Entrada, Mancos Shale at depth, and I believe there is some production going on from the Mancos Shale. But again, thousands and thousands of feet of productive formations. Sometimes I like to, all of our companies have interest up in the Bakken, but we're really focusing on a few 100-foot thick horizons in that particular case versus in this part of the country. We have a lot of potential targets. The next slide illustrates what is enabling, I guess, in this particular case is technology. And I'm hoping that those horizontal black lines are apparent. We've all heard about the horizontal drilling that's going on around the country and how that's enabled the shale production, oil production up in North Dakota. And that technology is going to be applied here too. It's being applied today. It's going to allow us to tap many of those horizons that were too thin and perhaps too tight, that we weren't able to produce them using vertical wells in the past. I think that in another 10 years, perhaps a majority of the wells that are drilled in the basin will be drilled using horizontal technology. We've also heard a lot about fracking. There's been a lot of fracking done in the West. That's not a new thing in this part of the world, but the technology is improving, and the cost of applying the fracs, the cost effectiveness of applying the fracs is also improving over time. So again, technology is enabling our ability to tap these resources. Again, going back through the boom and bust cycle that we've seen out here in the basin, there's been times where essentially no oil wells being drilled. But I think this technology is going to change that and stabilize for a good long time the oil production that happens in the basin. In addition to the horizontal drilling, I think we'll see infill, downspacing from 320s to 160s to 80 acres in some areas and some formations that'll support increased density as the fracking technology improves as well. What that all means is that the best days for the Uintah Basin from an oil and gas perspective are ahead of us. We can't look at this basin as something that's nearly produced up and we're working around the edges. I think we'll produce more barrels out here than have been produced to date. Another part of the equation is commodity pricing. On the oil side, it's been very supportive of applying these technologies and growing production. In spite of a weak economic picture in this country, the global demand for oil is increasing, and that has communicated into this country. And we've seen sustained prices above $80 a barrel. I think today it's 82.5 plus or minus. That works for us. And we can make these horizontal drilling technologies, the fracking work, and so forth. Another aspect that's important is the differential. We've had times when you could scarcely give away Uintah Basin oil. Refining wasn't set up for the waxy materials that we produce in this country or this part of the country. And the refining is sort of one of those situations, if you build it, they'll come. Once the capacity for production is there, the refining has come along with that. So we're lucky in that differential hasn't blown out. We're not suffering a huge deduct for the oil that we produce in this part of the country. The story isn't quite as clear for natural gas, or isn't quite as apparent, I should say. Natural gas, as the base commodity, of course, is priced poorly from a producer's perspective right now, less than $4 an MCF. But what we're seeing is a lot of uplift from production of liquids and separation of the liquids from our natural gas. I got to give credit to people that produced some of these slides. I borrowed them from presentations, this one in particular from Anadarko, earlier one from El Paso, that we've had joint presentations to folks, so I'm continuing to use those. But we see a pretty dramatic uplift in the net price received for our natural gas as a consequence of processing. And the processing that, for example, Anadarko is putting in, the cryogenic processing, we're able to cool the gas to a couple hundred degrees below zero, strips out even more liquids, and again enhances the economics of natural gas production in that you can sell effectively barrels of oil from their NGLs in this case, but barrels of oil from the gas that's produced in this part of the country. That's sort of the discussion of the broad potential and why that array of operators is here and focused on producing the resource. Bill Baird Corporation operations in particular in the basin. We have some gas production down south in the West Tavaputs area, some of the same formations that are produced down in the Natural Buttes area. We're producing about 120 million standard cubic foot of gas there a day at present, and hope to dramatically grow that with additional pipeline capacity and consistent drilling activity that we weren't able to pursue until the EIS was completed. We have an acreage position over at the west end of the basin, Lake Canyon, BlackTail Ridge, that we're growing, produce oil in that part of the country, and have some acres, the former elk or Delic acreage on the eastern portion of the basin that we haven't begun to develop yet, but we're in the process of permitting on. We have plans to drill around 200 wells in the Uintah Basin, including the West Tavaputs area in 2012. I'll make a point of what that drilling can mean. This is just focusing on the Lake Canyon, BlackTail Ridge area. And you see, let's go back as far as 2009 instead of going way back in history, but in 2009 we had a kind of an intermittent one-rig program running, and we were producing about 1,000 barrels of oil a day. And in response to the pricing, better understanding of the rock, we didn't have a lot of success in some of our earlier work out there. Again, technology and better understanding the geology that we're working with. Began to invest more, and we picked up our drilling activity to the point in 2011 we had a on and off 2.5 rig program running in 2011, increased our oil production from the 1,000 barrels in 2009 to a gross at the end of this year we expect we'll be producing about 9,000 barrels of oil a day, and with a continuous 3-rig program plus or minus in 2012, we hope to exit 2012 producing over 14,000 barrels gross. That's the growth curve is really remarkable there, and what that can mean for production of oil in Utah. We've done some informal polling of operators and looking at their oil dedicated objectives and drilling objectives, looking at something on the order of 600 to 800 wells per year that would be focused on oil production, looking across the, again, that array of operators that we're looking at. If you kind of by extension of that math, looking at sort of a historical, going back a couple of years, maybe 200 wells per year being focused on oil production, ramping that up to 600 to 800 wells per year. If in fact we can clear some of these regulatory hurdles, it would mean literally tens of thousands of barrels a day additional production from the basin, if not 100,000. See if I'm double clicking here. Well, apparently one of the slides is difficult to see. I'm going to summarize again the operator perspective of the basin. Tremendous in place, effectively proven reserves. We have multiple productive horizons that this technology can be employed to. One of the other important aspects is there's development agreements with the tribe, leases in place. The great bulk of this basin is leased, so we're not working through that long cycle of assembling lease positions. We have a array of well-financed, experienced, willing and ready industry partners to get this task accomplished. They all have a long history of operating in the basin. Not just our companies, but the services are here as well. That these folks are ready to go, given the opportunity to deploy the resources and the capital that we're talking about. And as I mentioned, informal polling looking at literally over 750 wells per year, projected to be drilled annually. Again, in the informal polling, and what that can mean in terms of driving the overall production in the basin. What the other slide illustrated that I wasn't able to bring up was how operators look at the risk scenario, and we typically, from a geologic perspective, are the resources there? I think we've answered that question. From an engineering perspective, have we cracked the nut on how we're going to recover those resources? And we think we're there, that we can economically produce many formations in this basin, unlock the hydrocarbon resources that are present, both the oil and the natural gas, as I've pointed out. Then you kind of cross into the market. Well, we're feeling pretty good about the market as well, that we're able to make gas work at today's prices. We're able to make oil work at today's prices. We're thinking that those are going to hang in there pretty well for the foreseeable future, and allows us to make long-term business plans for deploying capital in this part of the country. And today, something that we didn't face perhaps 20 years ago as producers, the regulatory and the environmental risk that you might have looked back 20 years ago, and if you've had those other risk factors addressed between the geology and the engineering, the markets, you were ready to run. But today, the regulatory risk is very real. The environmental risk is very real. And I hear a lot of good things today from our partners with the state of Utah, Uintah County, about trying to address those regulatory risks, increase that capacity so that we're able to sort of satisfy our business objectives and realize the potential that we're talking about. It's a difficult process. I see BLM working hard. BIA is involved in these processes, the Ute tribe, the state, EPA. But whenever you're growing, it's painful. And I think that's to some extent what we're seeing out in the basin. But stand ready to work beside our government partners to achieve the basin potential here. Thank you. You know, as long as these conditions hold up, I think it's indefinite. We don't see, I'm going to steal a little bit of thunder from what some of the other operators have said in their investor reports, but literally inventories of thousands and thousands of wells. So it is literally for the foreseeable future, again, if the market conditions hold. Thank you.